What's happening, everyone? Just wanted to come and talk a little bit about self-employment income this week. I'm getting a lot of inquiries in regards to self-employment income. And we all know that you get pre-approved and approved for a home loan in what we call the 3 C's of lending: credit, capacity, and collateral. This is something that goes way back over 20 years ago when I've been in the business. But there's obviously a lot more nuances to the industry than just those three, but those are kind of the three buckets. And capacity is your ability to pay the loan back. Now, as a wage earner, if you're a W-2 employee, it's very easy because we see taxes coming out and we're able to see what your net and gross income is. If you're hourly, if you're commission, that's a whole little bit different because we have to average it. And I'm not going to, that's not what this video is about. What we're talking about today is self-employment income. So if you own a business, if you are an independent contractor, in other words, you get a 1099 at the end of the year, or you own your own business where you have accounts receivable and you've got cash or checks, or you receiving payment through Venmo and in different avenues and streams of payment for services, you'll get with the tax accountant and you will show your gross revenue for that year. And then in your profit and loss or Schedule C of your taxes, you're going to have different breakdowns of expenses. And at the end, you'll have a net number of what you will pay taxes on. Now, a lot of clients have a lot of expenses, or they have a lot of mileage, or they have a lot of different things that gets that net taxable income down to a very manageable area where their tax liability, or what they would pay the IRS, whether that's quarterly or annually, you would mitigate that tax liability. But here's the catch, guys, and I want you to pay a lot of attention to this. When you're wanting to buy a home loan, first of all, you've got to show a 2-year history, 2 years worth of tax returns. And typically what they'll do is they'll take those two adjustable net income that's on your 1040s, which is translated over from your Schedule C, which has all those expenses taken away from the gross revenue. They'll take that net number, and there are some things you can add back in, but we're not going to get into that in this video. And they're going to take those two numbers, add them together, and divide it by 24, and that's going to be your monthly income. So let me give you an example. You're a truck driver. You're an owner-operator, and you get paid per load, and let's say your gross revenue is $130,000, but you have mileage, and you have meals, and you have other expenses. You got maintenance on your truck, and you have all these things that will whittle that number down to, call it $35,000. That's the number. That $35,000 is what we're going to use, barring anything that we can add back in. We can't use the 160. The 160 is your gross revenue. We have to use what's the bottom line after all expenses are paid. And so what happens is it puts self-employed borrowers in a very precarious situation because their tax returns are showing a low number. So on paper, rightfully so, it allows you to have a minimal tax liability, but you're not able to then translate that into good income for what is used to qualify you for a home loan. Now, you can use that $35,000, but that's going to be less than $3,000 a month. And if you have other debts, and maybe say you got $500-600 worth of payments, and your debt ratio would be 30% based on that $3,000 a month, that's going to qualify you for right around $900 a month. Maybe you have a $1,200 at 40%. Subtract out, now you've got $700-800 payment. Guys, $900-700 is not a lot of home when your gross revenue is $160,000. So I wanted to record this video because a lot of folks are contemplating being self-employed, and I am 100% on board with that. I love entrepreneurs. I love people that are self-employed, and I encourage that. I think that's why we live in America. It gives you the opportunity to start your own business and to be your own boss. But what we don't do is we don't inquire with mortgage advisors to determine, once you're into that position where you've been, first of all, a lot of people don't know that you have to be self-employed for 2 years. So I have people that come to me that just left a W-2 position and become self-employed, and they've only been self-employed for 6 months, and now they want to buy a home. Well, you're not able to do that because you don't have a 2-year history with your self-employment, so that we can take an average of that income over the last 2 years. And guys, I'm just talking in generals. There are exceptions to everything. There's non-QM loans and things like that. I just want to share with you some general knowledge in regards to self-employment, that you need a 2-year history and you need those 2 years tax returns, and they're going to take that average, which a lot of times hurts folks as far as income position in order to qualify for a home. So it keeps them out of buying a home unless they would fit into some of those other scenarios of non-QM and whatnot, that we can make work. So I want you to be cognizant of that, that when you're thinking about buying a home, you want to get with a mortgage advisor and talk about what the income level needs to be in order for you to qualify. So it may put you in a position where you have to start rethinking your taxes and writing off as much as you would normally write off. Maybe you don't write off the entire truck that you just purchased for your business this year. Maybe you wait until next year to do whatever. I'm not a tax advisor, so you definitely want to talk to your accountant in regards to this. I'm not giving legal or tax advice, but what I'm wanting to make you aware of is the fact that when you are self-employed, that we have to use that average based on that net adjustable gross income after all of your expenses. And a lot of times that number ends up being a lot smaller. I've had people where they give me a tax return and had very healthy gross gains of say 90,000, but at the end, after all their deductions, only had a $6,000 net gain, and they didn't have a lot of depreciation to put back into it. Maybe they did a little bit, and it showed them making $12,000 a year. Well, for that year, that's $1,000 a month that we can use as far as income, and we're using ratios to qualify. That doesn't put them in a very good position to be able to buy a lot of home, or a home that they would need to purchase in order to meet the needs of their family. So I just wanted to share that piece and nugget with you when it comes to self-employment. Become aware. Meet with a mortgage advisor in regards to what you would need to show in order to qualify for a home, so that you can be in the best position when you're ready to buy a home. Those tax returns have the proper income in there in order for you to qualify. Because self-employment income, again, I love it. I think it's great, but a lot of folks get literally caught off guard when we have these conversations because they were not aware of it. They looked at the bright side of being self-employed and all the tax advantages that come with it. But again, you can't have your cake and eat it too. You can't have a very minimal tax liability and then also be able to turn around and use the gross income in order to qualify for a home loan. It doesn't work that way. So get with a tax advisor and a mortgage advisor and talk about these things freely, especially if you're thinking about buying a house in the next year, 2 years, 3 years. Anyhow, I wanted to share that with you. I hope it's been helpful to enlighten you, to bring you awareness. If you're thinking about becoming self-employed and thinking about becoming a 1099 contractor or any of these types of things, you definitely want to put in the back of your mind, if I want to buy a house in the next year, 2, 3 years, that decision is going to affect how you will qualify for a home loan. So that being said, have a great rest of your day, and let me know if there's anything I can do for you. Bye for now.